Hey, what's up you guys, it's Adri here, welcome back to my channel. So today I'm going to present you 10 stocks that I bought during 2020 and now in 2021 performed insanely. So almost all of these performed over at least 35%, yeah. But I have one gem that was duly expected to perform that well and it reached around 170%, yeah, something like that. Yeah, I'm going to check later. Yeah, let's start. But before that, please subscribe, smash the like button, hit the notification bell and feel free to comment anything and I promise I will reply to you. Number 10, AGNC. This is a real estate investment company and it's basically a real estate trust that provides mortgages for residential properties that are backed by mortgages through the involvement of government institutions such as the Federal National Mortgage Association from the US and another federal loan mortgage association, I think, agency I think it's called. Yeah, and this one is basically the government, the US government, yes. So basically they make sure that they can provide loans, mortgages to people in order to get their home. And this is not the only thing that they do, but this is the main business strategy. They have a great dividend payment. They have they used to have around 10% dividend yield, which is, I know it's insanely high, but it made sense for me because they pay monthly. You get a monthly payment in dividends from investing in this company. So yeah, you are going to get paid by just owning their shares. Yes, and I invested at around $13.75, and now as of today, the 23rd of April 2021, their share is valued at $17.49. That's an insane gain, yes. Then let's see the next one. 9. Glue Mobile. We know everybody played at least one game during the stay-at-home period. And this is a great mobile app for gaming. Yes, they provide a lot of games. They started with the Kim Kardashian. They saw success with the Kim Kardashian game. Yes, and I bought this stock at around exactly $9.14 and I sold my entire position, even if they are going to merge with EA Games. So I sold it at around at $12.5. Yes, I don't know what I'm going to do next, but maybe I'll reconsider it during January or February next year. Yes, maybe I'll re-enter this one because they have some potential to grow even higher, but I don't know. Right now my analysis doesn't seem to provide for more potential in the medium term. 8. General Electrics. Yes, I might be crazy for investing in this company, but yes, I say crazy because this was a cash flow provider, because they were money makers before cutting their dividend payments. Their strategy is mainly to provide the alternative current, right? So they provide electricity for us and we need it, especially during the last year. We needed that, and that's what exactly saved this company. And I bought shares at around $6 and right now it's valued at $13.3. Yes, and I'm still holding this position. I'm not selling. I have much higher expectations for this company after they report their earnings for Q2 2021, because the current CEO took amazingly well some decisions that benefited the company and its shareholders, and now The board of directors is re-elected. I actually voted yesterday, yes, because this is one of the perks that you get when you own shares. You are allowed to vote for the way the company you invested in is going to conduct business for the next year. Yes, exactly. And General Electric's proposed, amongst other things, on the agenda to do a reverse stock split, which means that it's the exactly opposite thing of a stock split. So if we have a stock, a share, and we have a stock split, that will become, let's say, a 2 to 1, 2 stocks, right? Here we are going to do the exact opposite thing. If we have 2 shares, they will merge into 1 share. The value, don't worry, you're not going to lose your money. The nominal value around those or that share is going to stay the same. So if you have $100, it's the same. The only thing is that it advantages or disadvantages new investors. All right, but you have a preemptive right, and as a shareholder that invested before the new ones, and you're going to be just fine. I think traditionally speaking, a reverse stock split happens when there is distress, financial distress in the company, but we have to do that for General Electric because they care now about long-term investing. They don't want to focus on the short-sighted view, right? They want to benefit from the money of people that are actually in love with their company and their business strategy. And they are going to survive this if they are doing and play the game right. Yes, and that's why I will keep my shares in General Electric, and I think that after the Q1 report I might even increase my position in General Electric, even if it's going to be at a much higher share price. No worries, I have faith in this company. I shouldn't maybe, but that's why I invest in, this is a side note, in Plug Power and Nextera Energy, because I also like green stocks. I like being an environmental. Yeah, and I'm enthusiast about green stocks. Yes, I really am. We need that. We have faced really big problems with the climate change. All right, so next on my list is 7. This is a loser for me. It's about Invesco Mortgage Capital. They do almost the same thing as AGNC, but it's qualified as a penny stock. I was watching it in advance when it was traded around $1.73, but I waited too much, so I got in at around $3 and so, and now it's valued at $3.73. But I think that the company has still many assets and it can indeed spike, and maybe then I will sell. I'm not sure. They are also governmentally backed with their mortgages. So it makes sense, people will need homes, right? Next on my list is 6, Infosys. Infosys is an Indian IT company, and they provide excellent services in this field, and they spiked. Some voices say that it's overvalued, but I don't think so. I totally don't think so. So they are basically providing next generation services, and I bought this stock at around 10 or so dollars, and now it's valued at $17.85 per share, and I'm holding. I was thinking to sell, but I did some analysis and I think that there's still room to grow. Yes, around maybe June, July, somewhere there. Next on the list is 5, AT&T. I'm bullish always on AT&T because they provide amazing dividend payments. And now they reported great revenues and they doubled their clients, especially for HBO and HBO Max. The predictions of the analysts were totally overcome, and it raised just in the first day when the report came out. The share price spiked at around $31, and they are a telecom giant, right? They are heavily indebted, but once they pay off that debt, that's great, because they will invest in 5G and many other telecom necessary things. They are going to explode. They are going to make banks for the early investors. So maybe in 10-15 years, AT&T is going to be one of the best companies in telecom. I might be wrong, of course, but I do have faith in AT&T, and they provide a great dividend every single quarter. So as long as they do that, I will keep my position. I think that's the only way they can survive right now, because they have a lot of debt and they are not a volatile company, so their share price is quite stable at around between $29 and $36. Yes, and so I averagely got in AT&T at around $30 now, and it's currently valued at 31.36, and I think it's going to see some growth during 2021. Yes. 4, Pfizer. We know Pfizer. Let's thank them because of the vaccine. Yes, it caused much trouble because many investors at the beginning of 2021 bought the shares according to the saying. So basically the saying is, buy the rumor, sell the news. So investors, beginners, bought the news, and that was the time to sell, actually, in January. I wasn't actually doing that because I started my position once the rumors came out that they are going to get the approval of EMA, European Medicines Agency, and of the Food and Drug Administration. But I increased substantially my position, and I was on red for quite a time, but I knew that they are going to explode once the report is going to show up. Yes, and now with Johnson & Johnson and AstraZeneca losing their position, especially in Europe and many other countries, Pfizer and Moderna had to see a spike, obviously. Yeah, so I'm on red. Again, it's a massive company, this one, so you cannot see much volatility in Pfizer. And my average entry price was $34, and now it's $38.64. So I'm quite pleased of that, honestly. I'm quite pleased. It's around 22, 20, 25, 28, something like that. percent performance year to date, which is honestly perfect for me. I know what I said in the beginning, so there's some exceptions. I said almost. You can go back to check. Please do that. And smash the like button right now if I got a pause. Yes, smash the like button and subscribe if you find something valuable in this video in order to take new decisions for your stock picks. Yes, and now number 3, Coke. Obviously, I bought the dip, man. Yes, you know Coke. Internationally spread over 500 non-alcoholic beverages. Yeah, I bought this one at around $39, and it's $54.44 per share, which is awesome, right? Now I'm going to tell you about the hidden gem. So number 2, at home. They are doing basically what the Home Depot does, but for all types of households. Yes, I was looking for this one since they were trading for, I think, $10-12. Yes, and I only entered at $15.44 per share. And now, as of today, it's double. Yeah, almost double. I think it's double. I think I saw 100% plus performance today. Yes, but when I did my research, it was valued at $30.34. But I am sure I saw 100% plus performance at home. Yeah, and this is the hidden gem, guys. I sold more than half of my position because I didn't know. I think last week, 2 weeks ago, I don't know when I sold many positions, and I hold only half of the shares at home, and I think that I'm going to keep holding them. I'm going to keep holding them at least till this fall. Yes, yeah. At home makes sense. It's basic. It's a basic company. They provide something that we all need every single day. Furniture and many other things for the household. And on the number 1, as you were duly expecting, I hope so at least, but before that, smash the like button, please subscribe and ring the notification bell in order to get every single video. Yes, and now number 1, ladies and gentlemen, Moderna, of course. I bought the stock at around $69, and I sold some positions at around $180, and now it's valued at, let me actually check, why not? I got blocked. Sorry. So my fingerprint didn't work for 5 times in a row, unfortunately. Yes. So I think it's 170, if I'm not mistaken. I did this research 2 days ago, so I think 2 days ago, yes. I was quite busy to do this video, but I noted here 168, but I remember I saw even 180, I think yesterday, and today I think it's at around $178. Yeah. Anyway, you get it. It's almost 3 times the initial investment. Yes. So I also sold half of it. Maybe I was dumb, maybe not. I don't know. But I didn't know the news. I don't know that only Moderna and Pfizer will survive for this year with their vaccines. But by the way, I just got mine, so feel free to do it. I'm fine. No arm pain, nothing here. Unfortunately, I couldn't get Moderna in the EU. In the EU, you don't get to choose. So we equally distribute the vaccines EU widely, and you get what you get. You're lucky if you get it, I think, at the moment. Anyway, so Moderna, they are, to quote them, involved into transformative medicines based on messenger ribonucleic acid. So I think that with the revenues from their vaccine sales, which according to the Pfizer CEO might become an annual need from now on, which are going to provide amazing resources for both companies, and maybe Johnson & Johnson's, because they are focused on the production capacity worldwide. What was I saying? Yes, Moderna will use the revenues from their vaccine in order to develop new oncological medicines, because they are focused on treating cancer and many other diseases, on the basis of mRNA, which is a great technology, to be honest. Yes. And as a bonus, since I assume you are still here with me, Carnival. I bought this stock at around $17 and I sold it at $26.91. There weren't many shares because I don't know what they are going to do during the summer of 2020, so I sold it last year and I have to declare those revenues, apparently. Yeah, tax season still going on. Yeah, Carnival, I think, is going to see a spike during this year, but I think it's a good time to reinvest in Carnival, which I will closely look for. That's it. So before the end, I'm going to remember you to smash the like button, and if you found something, at least something valuable here for you and for your future investments, please consider subscribing, because I would tremendously appreciate that support. This is how you support this channel, and if you want me to keep going with such content, yes, and hit the notification bell as always, and feel free to comment down below, and I promise I will reply to every single one of you guys and give you a heart. Of course, everything for you guys. Thank you so much for watching, and till the next time, guys. Wait, subscribe.